Hello guys, welcome to the Trading Parrot. Today is 2nd of December, so that means that we have two things to do that are extremely important. We need to look into the candle close of the weekly and the candle close of the monthly. And what I got in front of you guys is the CPR monthly analysis. Yes guys, because we have already placed the pivots for December, and every single month it gives us a very strong clue but what should we expecting for December? And so far we are mimicking the steps of 2020, and that together with the CPR is pointing towards a very specific target if we repeat the past performance that I'm extremely excited to share with you guys. Of course, we're going to look into the most likely next liquidation levels that seem to be attracting the price. We'll cover what the delta is doing, which couldn't manage to get to the top of the range, the selling wall, all this grotesque ask liquidity that we are seeing in the chart, liquidation levels, and a lot more. So guys, we got a lot to cover today, so let's get ready with this. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. And on Sunday morning, I published this video called The Contradiction. It's all coming from a single chart explaining that from the point of view of the activity of the network, we are in a bear market. That is almost like saying retail is in the middle of a bear market, according to this chart, while institutions are in the middle of their first bull run. Are they going to meet up and either enter together into a joint bull market, or the lack of retail could cause a little bit turmoil in here, which is the moment where we hit the moving average monthly, which is something that we have done in the past two cycles as well. Pretty important milestone. Go and watch that video, don't miss it. You're gonna find it in Coin Bureau Trading, the channel. I publish 3 videos a week there, so make sure that you're also subscribed. So starting the week with very important events in the economic calendar, including today with the manufacturing PMI. There's an expectation of increasing the job openings on Tuesday, and if that wasn't enough, we have the Fed Powell speech on Wednesday, unemployment rate on Friday. All of this typically causes decent volatility. We closed the month of November on Saturday with 37.2%, and so far in December we are 1.25% down. You can see that typically following an October-November positive, we typically get a December positive too. That is particularly valid when we are talking about this time in the market based on halving events, which is 2020 and 2016. Indeed, in here we get 4 months in green, a flat January on 2017, and then still 23% in February, and the first red month is March. In 2020, we didn't get a green September because that's actually quite rare. We started the green in October 2020, 3 months in a row, and then 3 more months of green. The first red month after that was April, followed by May and June, summer. The month of November, we nailed the top based on on analysis done on the open interest instead of the price action. You can see that 32.251 billion was the top for the open interest and also for the price. But if we do the same Fibonacci extension on the price, it will have told us that the top is 106.7k, leaving the open interest better for trading because it actually forecasts the top. And that's what we were doing behind the scenes, not just this time, but all this range in here, we were trading the open interest. On CME, this weekend, there's not much really to say. We say that we close at 98.5. We opened slightly higher, just $400 above that. And we started coming back down. Very similar price action to what we saw the past week in here, but the gap is less evident on the 4-hour chart. You can probably see it in here, very small gap, similar to what we have here, but even smaller. And the result was just the same. The price went up, this time slightly higher, and then coming back down. Notice that on CME, the price action looks like a perfect double top on the 4-hour time frame. But if we look at this on Binance Spot, you can see that the second top is just 98 instead of 99.5, so 1.5k lower. Very interesting that it doesn't match the price action on CME. So I think that's it for CME. There's no more conclusions than the CME gap is gone, and just the usual reminder that we still have this one at 80 to 77, and the 54 and the 20 that everybody already forgot. So let's go with the 4-hour price action. You can see that my speculation that after hitting 100k we were gonna go sideways is not very far from accurate. We already closed a red candle below our support based on this line, and we hit also 94.7, which was also flagged as support, so we are right there. I think this trend line is no longer relevant, so I'm gonna get rid of that one. Also this one, the fail inverse head and shoulders, or the cap and handle, that was also failed because it broke out but it couldn't reach the final target, so we're gonna remove those targets to keep the chart a little bit cleaner. Also notice that before I went to sleep at 11 p.m. I published these two charts on the RSI showing the 4-hour and the daily, looking like they were attempting a breakout to the upside. Those were candles not confirmed. I mentioned that there is still 1 hour to confirm, and now if we go to the RSI 4-hour, you can see that it stayed just for 3 hours above it, but then ended up closing going down, and that confirms why I always say wait for candle confirmation. There is no rush to enter on a trade. You can also see that the previous weekend we have very similar price action. We have this support based on this green line. In the morning we wake up saying we broke down. And if we go now fast forward to Saturday, 30th of November, this Saturday, we did pretty much the same. Breakdown on Saturday and then continuation. So we will have to see in here whether the RSI is just gonna test once again around here, or if it's gonna put this higher low and attempt this breakout from here, which in my opinion, the lower we are going, the 4-hour is intensifying the potential for a larger breakout to the upside. A breakout from here will have been very low quality, this one mediocre, this slightly better. If we did it from here, it will be a lot better quality in my opinion, because then you get a full reset of the full range of RSI 4-hour. But it's early because we are in the middle of nowhere, no breakdown, no breakout to talk about in here yet. What we can talk about is the current levels of support and resistance. We got the 54 and the 34. So we're just gonna leave it like this. We have the resistance now, it's coming down to 96.8. That is a lot more achievable for a breakout. And we got our support at 93.7, very close to the confluence with 93.4. But before you decide any trade, we're gonna look into the CPR and the seasonality of the price action in December. Notice as well that yesterday we confirmed the new moon, and for those of you that believe in that, that typically pushes the price lower for 1 or 2 weeks, according to past performance. We also have a market cipher bearish divergence print at 1 a.m. tonight. On the daily, even though on the 4-hour is looking not great, we are still holding the breakout. It's been a very, very crappy breakout. It left a wick to the upside. It's clear to me that there is a line in here that held the price there on the daily 3 days, and now it's been 4 days resistance. That is 97.5, pushing the price back down into the trend line. And let's remember that this support from the RSI, which I need to check the levels, let's do that first. Support is at 57. We already broke below, so this trend line needs to be moved like this. So let's just say 57. Let's simplify things. Let's remove the 53, and the 29 in the lower end still stands for the global support. So global support is located at 69.7. Remember, I call that pretty much a potential March target or a black swan event target, but we keep it there just in case, because I think that way, because if we go for that, we pretty much undo the whole breakout, and that could come with a lot extra pain to the downside and even making fail the rally. So volume profile has been great because it has shown the level to bounce, and I'm gonna just leave this in here, apart from mentioning that our support on the daily is at 93.4. So that could allow for a little bit more bleeding in this way. And you're gonna discover once we get into the chart of the CPR monthly, for do anything you do, take a break from the video, but put a mind note to watch that part of the video. That's definitely the most important part I'm gonna cover today. That is basically talking about the forecast for December. Don't miss that part. You can skip if you get bored with the liquidity pools or the other part that is also important. So we could see some confluence in here from the RSI coming into the trend line, a little bit more bleeding like that. And I think that is kind of my forecast as long as we don't break below the trend line. Of course, breaking below the trend line and breaking below the point of control makes almost automatic the 88, 85 that we're going to discuss later in the video. We closed the weekly with a hanging man, and we started this week already in red once again. On the monthly, we managed to close November with an amazing candle, and this is basically saying there should be continuation. That doesn't mean that there cannot be pullbacks. The pullbacks can happen intra-candle on monthly candles, and then no one will even remember they exist. For example, you will never say that inside these candles, there are pullbacks of 40% inside. You just don't see them because every single candle is green, ends up closing to the upside, but particularly at 30, 40K in this area in here, they're very big, pronounced, scary pullbacks. And if you were trading there with leverage and stuff like that, I guarantee you that even going up like this, you will be really scared that the bull market is ended, because that is what people were discussing those days. Something very interesting is to see that retail has come down from 65 to 32, and that's less than half, okay? And this has been pretty much the cycle of the where the hell is retail, or when is retail going to come back, or the cycle of the ETFs, institutions getting richer, and all retail and all the people at home struggling to hit their houses and to pay the rent, and therefore not being able really to follow up with the bull market. With the exception of last month, it was extremely quiet for a bull market, with all-time highs in March all over here and still at levels of interest of 20s. So why is it important to talk about this 32? Because if we go here to 2020, you're going to see that there is a pattern that rhymes with what we are seeing. And we are going to talk about that once again when we get to the CPR, to the seasonality. And you're going to see seasonality in the price action and seasonality in retail as well. Not just that, okay? So everything kind of matches, which is extremely important as an alpha for you guys. Bitcoin peaking here at 30 and then coming back down to 20. So pretty much it slashed the whole thing, not half, but 1/3 or so. In here we went to 65 and we have slashed this to 32, but we are still not in the middle of December. So we cannot compare this candle in here, which represents 6 to 12 of December, okay? So it came down and then it continued coming down up until mid-December. It's a mid-December when we start seeing retail coming back once again. There are implications of what the Fed does in the middle of December, okay? That's what basically brings back retail at that point in 2020, and we see this explosion of retail coming back a lot more than what we have already seen, because this peaks at 30 and then by January you get 86, which is almost 3 times this peak. So imagine this gets to 65, we drop to 32, and by mid-December suddenly this 65 gets squashed by the normalization of Google Trends, because suddenly we see a 90 and this comes down, the 65 goes down to somewhere around 30. Well, that will bring another leg up in the bull market and distribution from long-term holders into them, because they will be buying, expecting Bitcoin to go to 300K, just like in here, they were expecting 100K, and, rinse and repeat. I mentioned this yesterday. We closed the monthly on the stochastic RSI. We closed at levels of around 70 on the blue line, and now we are above 81. I find that pretty bullish at the moment. It's a confirmed bull cross from the middle of the range in the stochastic RSI, and in the past that happening in the middle or at the lower end has had enough new momentum to bring another all-time high, which by the way we already had it. The bear cross on the weekly stochastic RSI is confirmed, and we started new candles now on the RSI pointing below 73. Actually, let's go and fully confirm that. You can see that when hovering the cross, the K line is 99.06 versus the D 99.22, and that confirms the bearish cross in my opinion. Let's go very quickly through liquidity pools. On the short term, we still have the upside packed, and it's starting to feel like one of those cartoons from the 70s or maybe even the 50s that someone was hanging food in front of the donkey just to get it to continue walking forward. And this is how it feels because it's almost like hanging an apple in front of a donkey just to get it to hit the ceiling every time. But notice that every time is coming lower. Yes, that liquidity is becoming thicker and more attractive, particularly when we look at these levels. You can see that it continues to grow against the alternatives below, and the only thing so far preventing us to take that, which is usually what we do, is the selling wall. On the longer term version of the chart on Trading Different, we can see that it's also there. And below the price, we are increasing here in the yellow with this move down. New stop losses are increasing. You can see there and the green there as well. If we put the chart so that we don't see that red, you can see much more clear how it's growing with every move. Those are longs that are putting the risk right there from 89 to 87.6. Then next we have the 79 to 78. Remember at 77 we have CME gap, so coming for this area in here, particularly if it becomes red eventually, or much more red than actually already is when looking at this area of the chart, then it's more attractive to come and take it. And so far, all this ask liquidity has done all the damage that it was promising to do. Remember when we first saw this around here, it already freaked me out. I got excited with this wall of bid liquidity, buying this area in here in confluence with the point of control on the daily volume profile that we talked about days ago. But that has just helped the price to move 7% up and put a lower high. And now that all that liquidity has been used, we need to think about this area as we already used the bullet that we can get from those orders. They got filled, they pushed the price up, and if they come back down, some of them are still slightly in profit in here with just over 2% profit, and they might as well start thinking to close the position, thinking that they might be soon in a loss. And with all this selling wall, which are limit orders spread away across all this range, wanting to distribute, it's at the very least a bit worrying or less likely that we can really reverse from this. The only way we can do it is if again we start seeing out of the blue a wall in blue coming in here. And this morning I was observing that we got one tiny micro bid candle in here, similar to this area in there, that was enough to move the price just another leg up, and maybe we can see something like this after this. But what we really need is like a wall like this that confirms that suddenly everybody wants to put buy limit orders below the price, and they have conviction that they can hit that 100k. So far it seems like the conviction is on the opposite end, is to dump the price. Selling wall is still there. Let's just have a look. Every day we say hello. Today is 184 million at 100k, so it has reduced but very small. The delta that we are running, but this time on a channel to the downside, you can see that it got really shy as soon as it was getting close to the top end of our channel. Just make sure that you understand that it's not always a delta that it makes just a line straight to the top. That doesn't exist. There's always a bit of zigzag going up. Let me give you an example. In here we go up to 14, 15k, come back down below, and then we put another high, and that's where we stop. So this rolling over in here doesn't necessarily mean we cannot reach the top still, but it's not an area where I will be thinking, oh, I'm gonna enter and long because it's obvious that here it has to go higher. No, this is an area where I will be thinking I'm gonna take some profits, or maybe I'm gonna wait a little bit longer but with a trailing stop loss, or I might be thinking to take a short as well, particularly if we get into this area and I still see so much ask liquidity. So where was the time to long? Where we were repeating this for at least 2 or 3 days when we were here, and at that point we have a decent bounce, and you could have entered on a trade with a potential upside of 7 to 8% from that area, even if we put a lower high. A very easy graph for the market maker is the same level I mentioned over the weekend, which is 94.2. Quite large liquidation relative to everything that we can find in the past 30 days. The exception is 99.2 on the top end, but it's not as high as this one in here. Fair value gaps to the upside span only up until 96.4, that's worth noting, and below the price to 93.9. We're just ranging in here, and I think the price needs to really decide whether we're gonna go for that 85 where we have the remaining fair value gaps on the lower end, or if we are gonna hit 100k and continue in price exploration. I'm a little bit inclined, based on past performance of the price, to continue looking for this 85, 88 in this area in here. That's just because of the past performance that has been so similar in September, October, and November. So why not looking at December again and thinking, maybe we could do something similar still? Nothing indicates the opposite. But of course, you know, I don't make calls for very long term. I like to look at the charts. So if we start breaking up to the upside, and in this video I'm talking about the 85k, I could give privilege to a breakout to the upside if the charts tell me in the next 4 hours that that's where we could be going next. That doesn't make anything wrong. It just means that I am paying attention to the data, and for me data is king. I don't marry any outcome. I don't fall in love with the outcomes like many people do, and then they get angry when things don't play out because they say, but how come? This was the thing that must have happened at that point. Nope. Look at the data. Keep your eyes open at all times. Okay, we are landing in the most important part of the video. This is why you are here. This is why you are subscribed to the channel. CPR monthly. On the left hand side 2024, on the right hand side we got December, November and October as well, but 2020. So this is the past. What can we see? We can see late September in here, coming back down, testing pivots in October, having a rally to the second CPR level, and in October at a high, and starting November coming back down to test pivots again. Let's just leave it there and let's look at the similarities in here. September was already at a discount in late September, so that is not necessarily the same, because in order to be the same the price should have come just from here like that, but instead we are coming from the bottom. That's fine. But in October, from then and on, is very similar. You start from the pivots. In October, in this case, you rally and you break above the second. In this case, you cannot break it. But in November, we come to the pivots. Perfect. So that matches. Then November, rally above the third. November, rally above the third. And what is bringing us down in terms of price action? End of November, 27, 26, Thanksgiving, holidays, right? That brings the price back down this year just to the first level of resistance, and in 2020 to the second. We talked about this already in previous videos. This is not new to you. What is new is what I'm gonna say now. We got the new levels of pivots for December. Those are located at these numbers, 92 to 83.2. There are 3 pivots every month. We got this flag that is symmetrical, and we got a breakout that is failed from the symmetrical flag. Look at that. Focus on the previous cycle and don't try to make it match 100%. Try to take 3 steps back, allow some flexibility for these things. Don't put your stop losses at the same places. Don't be so square-minded. Try to see it as a mathematician. And if we were to repeat the same performance, there are some things that doesn't allow it, right? Because the symmetrical triangle in here ends on the 3rd of December. That's where we cannot continue going lower using the same triangle, because this triangle in here spans up until 13th of December. And what do we do with the price action? After the breakout, which we could say is failed because it continues dragging and dragging, but always respecting the line of the top of that triangle. Eventually, it hits the second pivot, the middle pivot. The middle pivot in here is located in here, which is 87K. But I'm not gonna marry that target, and I'm gonna tell you why. That is because even though the similarities of November in these two cycles are remarkable, in November we didn't go to the second resistance. We only managed to go to the third. So you might be wondering, are you trying to tell us that we're gonna bounce then on the top pivot, not on the middle? So one level up, which is 92K, possibly. But bear in mind that the similarities in here are not just more bullish, sometimes it's one level more bearish. Example, October rally made it to the second and almost to the third. This cycle, we couldn't even manage to get to the second. So October had less performance than the previous October. November had better performance than the previous November. So why should I think that we have to hold that 92? It could be that we bounce off 83, which is more bearish. So I'm gonna allow some room in here to think that we could be playing with these pivots, okay? That's just past performance again. It's just interesting to think about this. Be prepared to be wrong on any sort of analysis. I just find magnificent that with some room, these two charts are looking so similar. But in no way I'm telling you that I will put my life against holding these pivots and not hitting 75 and not closing that CME gap. That could also happen. I just think that it's very high likely that we play in December in the first 2 weeks, just like we did in here, which we came somewhere in the pivots and then we shoot back up after getting confirmation from the events that we were waiting at that point, which were the Fed, the interest rate cuts, quantitative easing, whatever we were waiting around this time is the same in here. So that could drag the price down somewhere in here to shoot back up. That's kind of my preferred outcome just looking at these two charts. And something that could spoil that and why we could go for the third or even the first support, which was the red line, is what I'm seeing that the Fed is currently doing. And this is pretty annoying to see. You can see that we have a breakout in the balance sheet of the Fed. That was very humble breakout, very small, insignificant compared to the breakouts that we have in November 2019 and in August 2020 that fueled the rally at those points. We still don't see any explosion in terms of balance sheet of the Fed. And look what we are doing in here. We're putting a lower low relative to the 11th of November. We still don't come back below the trend line. We still don't break below that low. No, nothing that bearish, but it's not what we want to see. It's not what I want to see. I wanted to see here continuation and upside. And that is telling me that the Fed is still being cautious with their balance sheet. And that doesn't necessarily say that they are confident in their investments in the economy. Why are they so cautious at this point in time? And the dollar got rejection at 107 last week. It closed at 105 and it opened hitting the resistance, which is still valid, of the 106, and just goofing around there. Remember, my forecast from my analysis was to potentially see the dollar topping in the first week of December. That is based on 35 days after dollar tops. And if dollar has already topped, which is now going just sideways below the all-time high, but if it would have topped in here at 2.6K, then that top will be 4th of November, and 35 days after is the first week of December. So looking at this from the future, if we were in 2026 and this plays out, we will see the gold doing something like that and the dollar also coming back down from here, and then we will see an amazing rally on Bitcoin. Monthly on Bitcoin closed above 70. Indeed, it closed at 71.5. On RSI monthly, that is phenomenal. Typically closing above 70 on RSI starts a new uptrend, strong uptrend. And an uptrend can have zigzags. This is an uptrend, so you can have movements down and up and down. On the monthly, this uptrend is very obvious in here, right? But you have drawdowns of 20%. In here, you have a drawdown of 30%. We just have an impulsive move which may or may not be completed, so you could have some sideways too. Allow for that. I'll talk about the altcoin season. This video is already pretty heavy. I'll talk about the altcoin season in another video. I got plenty to talk about this because we are 2 points away from the altcoin season and the dominance is definitely on the way down, breaking down. We talked about this weeks ago. So I think that deserves a separate video. Guys, if you're looking for an exchange to trade altcoins and Bitcoin, look no further than Bybit. I have a link in the description that offers up to 30,000 in rewards based on trading volume, the lowest fees to trade as well, and I got a promotion running on Bluffing Exchange. This one offers bonuses based on the amount you deposit and how much you trade as well, separate bonuses. This promotion ends on the 14th of December. Be quick. This is my preferred alternative currently to go non-KYC if that's something that interests you, not needing to use VPN, although in some countries you might need to have VPN. In the link in the description, I have a new exchange that also offers non-KYC accounts, this time with a 9K bonus and 40% discount. The exchange is called 2Bit. It's very similar to Bybit. Indeed, many people that work at Bybit are the founders and developers of 2Bit, and that's why it looks very similar and an excellent alternative if you need to trade altcoins leverage with no KYC anywhere in the world. And this time, I'm very sure that they don't require VPN anywhere. Alright guys, I'll see you on the next one. Take care. Bye bye.